Hi everyone, welcome to my page. My name is Cassie Cavalier and I'm a real estate agent in upstate New York. And today I want to make a video and to give you some tips on the 5 top things that lenders are looking for when they go to qualify you for a mortgage. So we're going to break down exactly what the lenders are looking for, the steps that you need to take, and a few tips that to make sure that you are ready to get that big stamp of approval. And I just also wanted to say, if you are new, welcome. If you are coming back, welcome back. I'm glad to have you. And also, I just wanted to kind of make a note that I am on vacation, so my background is a little different this week, but we will be back in our normal place next week. So let's get started. The first thing that lenders are going to check for is your credit score. And most lenders want a minimum of a credit score of 620 points for a conventional loan. And, the higher your score is, the better interest rates you will be qualified for. Take that into consideration. So if you are applying for an FHA loan, you may be able to qualify for a loan with a lower credit score of about 580, but then that may also require you to have a higher down payment. And just kind of make sure that you are prepared for that. But if you need to go that route, just, we can have a conversation and make a plan of what we need to do and get better prepared. But before you apply for the loan, pull your free credit report, go through it thoroughly and make sure that there isn't any errors, and then also start paying down any of your credit card balances. So that will also help you hopefully get your credit score up as well. Number 2 is understanding your debt to income ratio. Here's look at your debt to income ratio, which is basically how much of your monthly income goes towards your debt payments. Most lenders prefer you to have 43% or less of your income going towards your debt. And this means if you are making $5,000 a month, your total debt payments, including your future mortgage payment, should be under $2,150. So the tip here is to pay off or consolidate any smaller debts before applying. So that would basically lower your debt to income ratio percentage. Number 3 is to make sure that you have stable income and employment. They're going to want to, the lenders are going to want to see steady income and job history, usually about 2 years in the same field. You'll need to provide pay stubs, W-2s, or tax returns if you're self-employed. And in New York, some lenders may also allow you to use alternative income sources like bonuses or commission income, as long as it's been consistent. Number 4 is save for your down payment and your closing cost. In New York, you'll typically need at least 3 to 5% down for a conventional loan, or 3.5% for an FHA loan. And don't forget those closing costs though. And that includes things like your attorney fees, appraisals, title insurance, and that can usually run you 2 to 5% of the purchase price of the house, but that's additional to your down payment. So 3 to 5% down for the down payments, and then 2 to 5% down of the purchase price for your closing cost. And you think that you may need some assistance, New York does have some first-time homebuyer programs that you can look into, and that usually helps with some down payments and closing costs. And if that's something that you may be interested in exploring, definitely leave a comment below and I'll be able to help you. Number 5 is get pre-approved before you shop. So once you have your credits, your income, and savings ready, the next step is to get pre-approved. This tells the sellers that you're serious and shows exactly how much you can afford. A pre-approval in New York is usually valid between 60 and 90 days and can make a difference in winning your dream home, especially in the competitive markets of today. The bonus tip here is keep your finances steady until closing. Once you're pre-approved, or once you're approved, don't make big purchases or switch jobs or open any new credit cards before closing. It can mess up your qualification, and so stay financially stable until you have the keys in your hand. So to qualify for a mortgage in New York, you need to keep your credit healthy, lower your debt, show steady income, and save for your down payment and closing costs. And get pre-approved before you shop. I help buyers navigate this process every day. So if you have any questions or you need a lender referral, please leave a comment below or reach out. I'd love to help you become a homeowner. If this video has helped you, give it a thumbs up and subscribe for more New York State tips in the real estate. And I'll see you in the next one. Bye.